Good morning. It is January 26, 9:38 Eastern Time a.m. Critical Point podcast for the stock market. And again, this is an audio update. Yes, we have a video podcast to go up. It was supposed to be free yesterday. We ran into issues, some technical issues, then ran into issues trying to load it. And in the meantime, we got some fresh data in and some late data and some new data and changed our opinion a little bit. We rushed to try to change the videos and wound up making a mistake and not really having the audio the way it was supposed to, or actually put up the wrong file, and just a fun time day, okay? But at least we got the grains straightened out, and hopefully that was helpful for people. At any rate, we've got another video we're trying to get up here today. Not sure what's going on. I can't tell whether it's really just the internet or something on our end or something on the pod host, but it just seems a bit slow for some reason. At any rate, don't have a problem with giving a free audio here to tell you what's going on in the video, because I think it's really simple. Stock market's going up, and the Robinhood traders, day traders, are supposedly costing the hedge funds billions, and rushing the bears out, and all the short squeeze. They got all this fun new stuff going on. Bottom line is, I think they're going to continue to buy for another 2 to 5 days. I think they're going to buy into next week. We then want to watch out for a level 3 top. That would be the first of 2 opportunities to place level 2, level 1 tops, and that's in relation to trends going back to September, as well as into to August, if not earlier. So I do think we're approaching a point where some of the big players will finally say, really don't want to buy here. I've got to back off. And it may only be just profit taking and a minor back off during February, but it could be really short term but very volatile, like an earthquake. It could be sizable. My guess is it's only going to pull back 3%, but I have 5% and 7% on the table. I do not believe in those forecasting a 10% drop. I do not believe those forecasting a crash. Some of them are even forecasting a 1929 style crash this year, okay? Well, I realize, yes, we're in a bubble, but only by some measurements. Some measurements we're not in a bubble. And by some measurements, going back to 1929, people are saying, oh, it's so extremely overvalued. No, if you really dig deeper, we're nowhere near extremely overvalued as they were in 1929. And things have changed, even though these business cycles don't change in terms of duration of time, and price can only do 2 things, up or down, so there's no change. It's going to do the same thing regardless if you have a new economy or an older economy, or exciting or boring fundamentals. It's just going to go on and do its own thing anyways relative to those business cycles. That's a fact in my opinion, and that's going to hang around for a long time. But inside of that, however, we do get new, fresh news. We do get new relationships that can create new forms of overvaluation or new levels of overvaluation. My guess is a lot of those studies saying the market's overvalued, they're going to be wrong for decades, perhaps. Okay? So I just don't trust any of that. So I'll stay with the pattern. When the pattern says, hey, we got a major sell signal here, I'll go for it. And by the way, I hope to put up a free video here soon. I was hopeful to do some kind of movie production kind of thing with pictures from history and the more detailed discussion of history. I'm probably going to opt for just a brief video of just a stock chart going back to the late 1700s, believe it or not, and just a quick discussion is probably all I'm going to do. What I've done is found an alternate model that has a very interesting history behind it, relates to even climate and commodities and other things. And the result is I've found that I can prove the 1929 high was far more important than what I've been saying. And I've found it merges with what I've been forecasting for a crash in a couple of decades. But that model also warns that it could come earlier than we think. And I will tell you that period when I do that video. I think it could also come later. So we have a range, and we're going to discuss what that range means in terms of evolution of who we are as a people, but also business. And there's some fascinating things going on in the evolution of energy, perhaps even food, that could make impacts in employment. And then I think we do have financially unstable markets. The Federal Reserve's trying their best to fix that. They don't want to talk about it and get people scared, so they're not going to really come out with it. But we've had some issues. So some things can happen here where we can have maybe a repeat of a 1929 crash. I've got my own particular version of that, however. So I hope to explain that and put some fun things out there. Many of you have requested that. Okay? But in the near term here, My guess is we got a bull market this decade, we got a bull market this year. Granted, I suppose the latter half of the year the market doesn't do anything. And even during the decade, we could have a single year at times of not doing anything in the market for some strange reason, okay? But generally, a bull market atmosphere attitude. And I just don't think those saying the bubble's going to burst any day now to the next 2 or 3 years, I just don't think they're going to get it right. But we can have some large downdrafts at times and some corrections along the way, and I'll do our best to prepare us for that, and hopefully we can time it correctly. All right, we are setting up for a moment of a correction in February. I'm a little concerned now it's not going to be as bearish as I thought, and the reason I'm saying that is I'm fully invested. I'm more than 100% invested. Some of my things are as much as 300% invested, and I'm comfortable with that because I protect everything and I can just get out of everything and I'll have a quarrel with just dumping practically everything. By the way, my long-term position since March 25th, however, that particular core position, I'm not managing risk on, and I would just set on it for the rest of this decade. And it is fantastic performance, okay? So things have been working well, but there's always little twists and turns to give us troubles and problems, and I'll do the best I can to assess that. For you followers, if you take a look at the cost of this podcast, granted, it's not volumes of data and archives and databases, and we're not going to write a newsletter and bog you down with 10-page reports and things like that. I did that for many years, worked for major firms that I had to write those kind of things, and I've basically found when it comes to talking to the traders and investors, they've read very little of those kind of things. They wanted the bottom line. And so these days I've learned, you know what, people get a better understanding of watching a video than they do audio, and both of those are better than actually reading a report. And so I've decided to strip all that away, charge a lower price, and be more oriented towards model output and signals and my personal opinion, and leave it at that. But I've also felt like I should price at low price. It's so low price, and I just don't understand people who won't say, there's no reason to just wait and try to look for the free stuff. You know, that worries me. That person really isn't a serious investor, and they really don't have much money in the market. So at any rate, I think you should give it a try. And my guess is that when I look at our retention percentage, my guess is you're going to be on board for quite some time. And we've got some fantastic things coming later this decade. And I'll discuss some of that in that upcoming free video. At any rate, where we are today, I think we got record highs coming by next week. And that's my really short-term forecast. But we are mindful and watching for a correction in February. And hopefully we can handle and deal with that correctly, appropriately. Manage your risk relative to others, and have a great day. Thank you.